Hello everyone. With recent price decline in gold and silver, I thought it would be interesting to compare gold and silver price prediction from major banks, made at the beginning of the year. We will revisit forecasts by UBS and Goldman Sachs with their 1,600 and 2,500 end of the year gold price prediction respectively. Who is going to be right? Will we see gold drop to $1,600 per ounce at the end of the year, or will we see it soar towards 2,500 level? Let's take a look at both reports first, and then we can try to form an opinion. Let's start with UBS, since current price of gold appears to be confirming their theory. Then, we will revisit $2,500 gold price prediction by Goldman Sachs. At the beginning of 2022, UBS came up with forecast predicting downward trend in gold prices for 2022-2023. I think it was a difficult call, given the panic during the first few days of Russian invasion of the Ukraine. Gold was pushing towards the record highs and the demand from retail investors and investment institutions was at a record level. They must have had a very strong conviction, given that UBS advises high net worth individuals and entities all around the globe. They have a reputation to maintain, and you do not maintain that reputation by making rushed announcements. So what was happening with gold in 2021 and 2022? As far as I know, in 2021, central banks were net buyers of gold. 2022 is shaping up to be a record year of gold buying by central banks as well. And this is a huge portion of the demand equation. Central banks are the biggest buyers on the market. There was also strong demand for gold bullion from gold ETFs, following strong demand from retail investors piling into paper gold assets. Gold had a great run in 2020 and many retail investors tend to follow the trend, so demand was very robust. Given what happened on nickel paper market, I think ETFs are trying to make sure they have enough physical gold saved. Judging by some presentations given by major bullion dealers, individuals were stacking on physical gold and silver at a record pace. Side note, I never understood why investors ignore gold when it's cheap and piling in when the prices are skyrocketing. I think the best time to buy gold or silver when it is unloved, but it's just me. So in light of all this demand, how did UBS justify the price decline? Forecasting 2022, UBS analysts said the gold market is expected to revert back to focusing on macro drivers such as real interest rates, U.S. Federal Reserve policy as well as the growth outlook. In fact, UBS sees gold prices falling to $1,600 per ounce by the end of 2022. An environment where real rates are rising and the Fed is tightening policy does provide a negative backdrop for gold, UBS analysts said. We do think that the strength should ultimately be short-lived. It looks like she was right on the money. We saw few fairly aggressive hikes by Fed, end of asset purchases by U.S. Central Bank. Last 75 points Fed rate hike definitely put a lot of pressure on the gold, among other assets. With incoming news about possibility of another 75 basis point rate increase, I wouldn't be surprised to see gold dip below $1,700, and silver below $19 per ounce. I still do not see how the real rates come in play at the moment. Inflation is still above 8% and the current Fed rate is well below 2%. As far as I can see, we have a 5 or 6% negative rate, which should be great backdrop for precious metals. I guess UBS projected inflation to subside to sub 3%. In this case, Fed's projected 3% interest rate would be neutral. But so far there is a big doubt that inflation will go this low. We will see. I would pay close attention to the following statement of the UBS forecast. It will be important for our discussion on whether gold will go down to 1,600 level or if it would move closer to the 2,500 mark. I think the key risk here is if we start to see reallocation into gold, with the expectation that although real rates are moving higher, they are likely to remain in negative territory, and therefore an allocation to gold remains attractive, the strategist said. Furthermore, allocations to gold could start to rebuild as investors grow more concerned about economic growth slowing down as the Fed tightens policy. And here I am getting a little bit ahead of myself. In this last statement, UBS is saying that investors are not fully priced in the expectations of interest rates remaining negative for the long term, and the report by Goldman supports this thesis. But let's dive into Goldman Sachs' gold price projection now. In their note to clients, Goldman Sachs wrote following. The last time that we saw all major demand drivers accelerate simultaneously was in 2010 to 2011 when gold rallied by almost 70%. Given the material upward revision in investment and demand assumptions, we now upgrade our 3, 6, 12-month gold targets from $1,950 per ounce 2050 and $2,150 an ounce to $2,300, $2,500 and $2,500 per ounce. Just want to remind everyone, this projection was made in January of 2022. I don't want to go into all of the details of the report, but basically analysts from Goldman pointed out that gold ETFs are investing in record numbers into physical gold, creating heavy demand, and they believe the trend will only increase. Analysts also believe central banks will be more aggressive in 2022 building up gold reserves, and that can put a strain on the supply of gold. As we have mentioned before, central banks are the biggest buyers on gold market. And the last reason cited by analysis is that demand for gold will increase when investment community would realize the inevitability of the economic slowdown to stop the inflation. So far, business community largely ignored the fact we have negative rates. It is hard to say why we haven't seen a bigger shift from bonds into precious metals, but what both reports are pointing out is that when it happens, gold's upward repricing can be swift and dramatic. Since the beginning of the year, we have seen many of those predictions play out. We are seeing economic slowdown worldwide, we are seeing inflation and interest rates going up. There will be some repercussions after ban on Russian gold. But how do we reconcile two seemingly opposite predictions? $1,600 per ounce and $2,500 per ounce by the end of the year? I think both will prove correct. So far for sure UBS seems like a winning forecast. We are almost in $1,600 range for gold, and there is decent chance it will go down some more. But as we started to see in latest unemployment reports and moderation in inflation rates, economy has started to slow down. That might force Fed to go back to more accommodative monetary policy. Goldman was actually very specific with timing of the forecast. They projected gold moving higher towards the end of the year, after investors re-examine probability of the longer-term negative rates. If that scenario fully develops, remember, a closing statement from UBS report regarding risk of reallocation into gold in case of expectation that the rates will stay negative, forecast of UBS will be in a complete agreement with the forecast of the Goldman. So there we have it. I am not a financial advisor, this is just my opinion I wanted to share with you. I'm still buying gold and silver any chance I have. I have another video with new Silver Britannia coins coming up, still waiting for my shipment. As always, thank you for watching. Subscribe and like if you would like to be notified of new content as I post it. Until next time.